wait a second. I've been brainwashed, and we all have been, to say 7% is the only thing we can ever get. And yet here are these people over here, they're going for 100 and with real money. Like, what's wrong here? So I just became fascinated, and it really changed my mindset, and it made me want to go for more.
Welcome back, everyone. Today I'm sitting down with Scott Welsh, an Algo trader. We spoke a couple years back before COVID. A lot's been going on for him since COVID and everything around. And we'll get to talk about his algos, how he's preparing them, how he's coding them, how he's putting them in the market and managing them over time. So, Scott, how's it going today?
It's going. It's a little bit in the evening here in Florida, but it's going great.
Awesome. Good to hear. So, let's kind of start with this because we have a lot to discuss, of course, with algos. But tell me what's been going on since we last spoke a few years ago. Has anything changed in your trading and how you do things? Is everything still the same?
A lot has changed. A lot is the same. Still, 99.9% of my money is algorithmic, and there are a lot of different types of algos. The ones that I like are the ones that the human doesn't get involved. Some people like to have a robot take a position, then the human manages it. That's just not my way. So I'm very much, if I'm going to trade with algos, then it's doing everything. Like, I'm not doing a darn thing. I can spend my time better somewhere else. So that's the same. I still believe in trend following, even more so. I was really struck by the Nicholas Darvis book, from decades ago, how I made $1 million in the stock market or whatever, and how his journey. And again, this was before computers and all this, but he said, he tried fundamental, he tried value, he tried all these things, and nothing worked until he started buying breakouts. And I thought, oh, that's a cute story. And it's like every month that passes, I'm like, there are so many ways to trade, but holy moly, if you just buy breakouts, you got a chance. You got a chance to make money a lot. So not that the win percentage is high, but as long as your risk reward is good, So still trend following. I did develop a system in 2019 that I'm still trading today. I'm very manages a lot of my money, but I've developed probably 30 to 40 different versions. And, I tell my members all the time, my biggest regret is that I'm not trading 30 to 40 different versions of my algo at once. It's not easy, especially in the US because FIFO. But yeah, I'm still trading algos. I'm still 100% algos, a little bit different. I've entered a trading contest too, which is different, but otherwise very much the same.
Interesting. So there's going to be like two types of people who are going to kind of have different views of algos. First, you got the people who say, well, you just leave the algo run, then it's going to make money like 24/7 forever, and you'll be able to become a billionaire in like 3 years. Then you've got these other people who say, oh, you got to manage the algo all the time. You're going to tweak the settings to make it work all the time. How does that fit in like within your algo trading? Do you have to change the settings often? Do you just leave it run and be done with it? Or how does that kind of work out?
To be honest, I want more than anything to re-optimize my algo all the time. I mean, I feel like that makes sense. When I started building robots in 2012, my favorite people that I was studying at the time were like, well, this robot, these settings are good for 4 months. And then at 4 months, you re-optimize. And that honestly made so much sense to me because the market's changed. Like, how do you know your robot's going to work tomorrow, going to work next month? Things change, So I've always in my heart believed that we should be re-optimizing all the time. And I don't ever re-optimize because the reason why I've spent dozens and dozens of hours manually, even I've done walk forward testing with software, and I've done it myself, testing it for a certain amount of period, re-optimizing, and then going again. It's the true walk forward, right? It's the only true way to trade, and it's never better. Like, literally, Etienne, not once have I ever done walk forward, in that sort of mechanical or manual way, and has it ever worked? Like, it's never it's never been more profitable. So maybe it's the way I test and develop. I develop for the long term. I don't develop for short term profits. I don't try to make the most. I try to make something that will last in all market environments. So, my goal when I build a robot, I don't plan on changing it ever. And I know people get crazy about that. And I know people say you have to change. And I know everyone says every algo fails at some point. But I'm just telling you what I watch every day and what I've tested, with my eyeballs. And, re-optimizing, I can't find a way to make it work better.
Well, it's funny because people trading manually don't re-optimize every like 5 or 6 months. They're never gonna like re-optimize the strategy. They might do some backtesting in the future to see how things evolve, like what they can do better, but they're not gonna change the settings like every few months. So with an algo, there's no reason you would do that. And I think that if you code it with the perspective, like if you have the market that doesn't change, like you mentioned, trend following, breakouts, then it's a lot easier to kind of make it stand the test of time.
Well, I think it's interesting. If you're looking at discretionary traders, it's hard to find a better one than Mark Minervini. He's got 2 books out there. I listen to trader interviews for fun. I would like stuff like you do, for example. And if Mark Minervini won the U.S. investing contest in '97, I believe. He won it multiple times, but let's say '97, and then he just won it again in 2021. That's a lot of years apart, right? It's over 20 years apart. And in interviews, he's talked about he's a discretionary trader. He hasn't changed in 39 years. He hasn't changed his style. Like sometimes his profit target changes a little bit. Sometimes his stop, sometimes it's 5%, sometimes it's 6% stop. But isn't that weird that he's a purely discretionary trader and he hasn't changed in 39 years, but algo traders have to change? I guess that seems weird to me. I understand why people say it, but I just don't know if it's true.
Yeah, it's a good point. So I also have some thoughts on that for sure, but that's a good point. Now, next thing I want to hear you on is the key word we hear everyone say when they hear algo is over optimizing. How do you avoid that? How do you make sure that your algo is not over optimized over past data and that you're not going to have like a crash right after you go live with it?
Yeah, it's the question, right? But it's no different than asking Warren Buffett when he's down 50% in 2008. Is value investing dead? You know what I mean? Is Coca-Cola dead? Is Wells Fargo? Is Geico dead? So in other words, it's everybody because people are so nervous about algos. I think they want to ask the question more. You don't worry about your significant other because they've had a bad day. You don't need to re-optimize them. But when do you know? I mean, that's the question. For me, it's a terrible answer. The real answer is okay, you've got a max drawdown. Let's say you're willing to take a 50% drawdown because you're a crazy person, right? And your drawdown's now at 53%. Maybe there's something, right? So what I would do at that point is I would go back, okay, I'm down 53%. Why? Well, I'm a trend follower. So I better be catching these trends, right? If I'm looking at my instrument that I'm trading and there are massive trends and I'm not getting them, I got a problem, right? I need to reoptimize. Or if my instrument isn't trending anymore, all of a sudden Tesla doesn't trend anymore, for example, it goes flatline like Pfizer used to, years ago or something like that. Then, oh, geez, my instrument's not right. The nice thing about being a trend follower or breakout trader is that you really can know when something's working. And, a lot of algo traders will say, well, it doesn't feel right. Like it's not working right. Well, that's a gut feeling. That's not, that's not a metric. But honestly, there have been robots where like, this isn't right. It's not catching the trends. It doesn't feel right. And I've dropped them or tweaked them. This was, years ago, probably 4 or 5 years ago. But honestly, for me, yeah, there are metrics. I think max drawdown's a good one. But what is the why behind your algo? Why are you trading? And if it's not doing that, we need to do something about it.
That's a good point. How many instruments do you trade on any given algo for like at any time? Is it like a bunch of instruments or only a few ones that work with that algo?
How did you know you're hitting all my hot button topics? You're just trying to get me so fired up. How did you know exactly what that? We didn't rehearse this, by the way. Well, I'm reading a book right now, as fate would have it. It's an older book. I like old books, by the way, because I like to look at stuff written in the 80s and the 90s and see if it still works today. And the stuff that does, I mean, that might be something great. But I'm reading a book on Warren Buffett, but it's Warren Buffett's portfolio management. And of course, as everyone knows, he's a focus investor, which means you don't buy an index, you don't diversify, you don't do any of that. You find one good idea a year and you put a lot of money on it. This is Warren Buffett. This is not me. Okay. So isn't that interesting? I think it's the book's Robert Hagstrom is the one who's writing it. Well, I have felt like since 2012, I've always felt like, well, you're supposed to diversify, right? You can't just trade one thing or two things. And, for years, I'm like, well, I've got something I really like, but I better put it on something else, because if it doesn't work on something else, or if I'm not trading something else, then I'm wrong. Like I'm breaking the rules that are written in stone. So to give you a long-winded answer to your question, I'm tired of all that. In the last 12 months, I'm like, I'm only trading the charts I like, and I'm only trading the instruments I like, and I'm happy if it works on something else, but I don't care. So in Forex, I love the pound yen. Okay, why? Because I'm a trend follower. Okay, well, what trends the hardest? And I'm not talking about the exotics. I'm just talking about, the crosses or whatever. Pound yen, right? So I've done euro yen, I've looked at the Aussie yen, but it's like my pound yen charts are 5, 10 times better than anything else because it trends 10 times harder. So I trade, my diversification is a bunch of different systems on the pound yen. But I gave it up, Etienne, not that long ago. I just said, I'm tired. I'm tired of losing trades on my second favorite or my least favorite. I'm not going to play a basketball game and play my worst players because I have to if I need to win a championship. So sorry for the long answer, because I told you got me fired up, but I'm only going to trade stuff that trends. So if I'm trading stocks, I want something that trends. If I'm trading futures, I want something that produces. And if I'm trading Forex, I want something that moves.
You could say that in a sense, though, especially in Forex, the pairs are kind of correlated a lot. So trading like 10 pairs wouldn't be necessarily a wise move compared to just one or two. At the same time, I know like people are going to say, well, you're missing out on profits on this and that. But it's knowing like what your strategy perform good in, then just focusing on that. And I think you're doing that really well. So that's, of course, a good thing.
Well, I mean, I'm willing to be wrong, right? I totally believe in strong opinions loosely held, and I believe in stuff very strongly. But if the pound yen stops trending, then I won't be trading the pound yen. It's trended for 20 years. I think it'll keep trending, but until something trends harder, I'm going to stick to it. And again, I probably have 30 different variations of the pound yen. So in a sense, that's my form of diversification, even though I don't trade all of the versions.
So tell me about that review process for your trading. How do you go back and see a result and decide if you're going to turn off something or change something with your algos? Is it like a quarterly review or monthly one, or is it something you do daily?
On my website, I started this year a performance page where I just track month by month the algos that I'm interested in. So that's monthly, and I want to track that ongoing for years and years and years and years and years. So definitely, I look monthly, but probably annually. I like to go January to December, and then by next January. It's so hard with trend following. It's so hard in trading anyway. But there are years that don't trend that great. There are years that are filled with reversals. Trend following by definition doesn't work when there are no trends. So trend followers have losing years all the time. So that's a problem, right? What I had a losing year, am I done? You have to give something a while now. So I'm looking at it every month. I don't probably look at it quarterly. I look really, really hard annually, but it probably takes me over a year to switch now. Now, would I open up a new account and try something else? Maybe, with a small amount of money. So that's kind of a change. But when I put, a lot of my money on something, it's going to be hard to change it. I don't change very fast.
So the thing is, these algos are not like high frequency trading. You're not taking trades like every day or a couple of trades a day, right?
Right. Yeah. Mine, it looks for a trade every day if it's not in one. But no, I can go several days. Yeah. It's looking for a very specific breakout with some momentum behind it. So no, yeah, I don't trade every day. I mean, I get a decent amount of trades, but no, it doesn't look every day. It's pretty patient.
Interesting. So I know we discussed this the first time, but we're talking about how to find strategies that you can code into an algo. Can you maybe recap and go back again on how you found your strategy that you have for the algo now?
I read a lot of trading books, and sometimes I don't know if traders still like reading trading books. Sometimes I feel like it's passe. I don't read trading books, whatever. I love reading trading books, and I love finding ideas. And there are people out there who give great ideas. Kevin Davey, for example, he's from Ohio, and I'm from Ohio. I've corresponded with him a couple times. I think he's fantastic. He writes books and with only ideas in them. And they're trend following ideas, they're mean reversion ideas. Stocks and Commodities magazine. Um, old trend following books. Brett Penfold has a couple of great books. There are ideas everywhere, and so that's basically what I do. I search for trend follow turtles. I have a robot based on the turtles, for example, and I've read every turtle book, and there are tons of ideas in turtles. I find the trend followers. I see if there's a book about them, and then I start immediately coding breakouts, and I go for big profit targets, or let it run, which ends up being a big profit target. But I'm constantly looking for anything that's trend following. I want to try to code it and take a look.
The coding is a big question, though. A lot of people are not used to coding them, at hiring someone to do the coding for them. Are you doing the coding all by yourself, or do you have any other help, people you employ to do coding for you?
I trade on MT4 with Forex. So I have a programmer for that. His name's Daniel Sinig, and he's fantastic. He has his own business. He creates self-adapting indicator. He's awesome. A great programmer. So he's programmed. He helps me with my MT4 strategies. I can code on TradeStation/multi-charts. I'm decent. I'm decent enough to be dangerous in easy language. So anytime it's futures or stocks, I can pretty much code that myself. Nothing complicated, but most of my stuff is very simple. So yeah, it's tough to find a good coder for sure, especially in MT4. But I think with the other platforms, it's pretty easy. And then, as an aside, I like to give out free strategies in my newsletter that I write for fun. And I give out free strategies all the time. So you'd still have to find someone to code them. But I try to be the person, I appreciate people giving me ideas. So I try to give back. So that's another place for other people to go. And plus creating ideas helps me think too. So, just by trying to give good ideas for other people, that's another place to get good ideas. But yes, in MT4, you have to, at least I have to have some help.
On that topic, a lot of people think that ideas are like the key, like the secret thing, but ideas come in everywhere. You can find them everywhere you want. The hard part is the implementation of them. So being able to code them, training them in the market, manage them over time. So that's the tough part. But yeah, definitely the ideas are, I think, a good thing. You can find them everywhere. It's good that you share them, of course. But yeah, they're everywhere, these ideas. So that's awesome.
I am shocked at if you use a longer term chart, meaning in Forex, at least 4 hours, because it's 24 hours, or daily, weekly, if you're looking at stocks or futures. I'm shocked, especially in the last year or two of my research, how simple the strategies can be. Like, there is a site too. I'm plugging all these people. Why? I'm just giving so much information. There's a site called 40in20out.com. It's an academic study, and they are in real time trading a basket of futures with a 40-day breakout and a 20-day trailing stop, and that is it. And they made like 100% last year in real fake money. I think they're up 36% this year, just following trends in the futures market. Like, put 40 in, 20 out on Apple, anyone, in the daily or weekly chart. You will be shocked at how much money a system, like no stop loss, no target, 40 in, 20 out, or 50 in, 20 out, or 40 in, 10 out. Like, it is shocking how that stuff works. But can a trader sit and see a losing trade? Can a trader sit when they're up huge in profit? Like, it's the human that screws up the breakout system. It's a human that screws up these simple systems. I'm shocked every time at how simple the system can be and it can still produce profit that would beat an index fund. I see those all the time, and I talk about them all the time.
I know for sure people are going to want to know about the Forex one. So what do you think could work in Forex, especially higher time frames? What would be an example of a decent system that could work on that?
Well, I've done. Let's see. What was my last lose? It was a daily. It was a daily RSI strategy. So a daily chart, and guess which currency pair I use? Pound yen. So it was a daily chart, and I did a 20-day breakout, and it had a time exit. Time exits are incredible. I never knew that until you do the research. I can look all this up for you. I think it was an 8-day. If anyone who reads my newsletter knows, I think it's an 8 time exit, right? So you break out above or below the low of 20 bars. You do have a stop loss. I think it was about 250 pips. And it's an 8-day time exit. So you exit after 8 days unless you've reached a profit target, and an outrageous profit target over 600 pips. I think it was 625 and 1,000 pips for long trades. Long was 1,000. I think short was 600, 625. That's ridiculous. Oh, the RSI was the RSI2, very famous RSI. I think I've seen it. It was in stocks and commodities, but the length is 2, and then it's 70-30. So you get in when the RSI goes overbought, so you go with the trend. Then you go for those profit targets, or actually you can get in a different strategy altogether. Is you get in a 20-day breakout or 20-day low, and you also put a time exit on that. I think the time exit on that was 6. So I may have mixed my strategies, but that the idea that a RSI2 breakout with a time exit or a 20-day breakout with a time exit and just a reasonable profit target and a reasonable stop loss, I mean, it's mind-boggling how much money you can make if you can just hang in there. I mean, it loses too, don't get me wrong.
That's actually my favorite way of using the RSI. Is like buying when it's overbought, selling when it's oversold, so doing the opposite of what most people are talking about online. It seems to work really well. So yeah, good you mentioned it. But
Yeah, I've tested that so many times, ATM, buying on a breakout. And I've tested the other way too. I spent 2,000 hours on a system that did the opposite. So, but again, I'm a trend follower now because I believe. So yeah, buying it overbought and selling it oversold. I mean, it doesn't have to be that RSI, and it can be different time frames. But I mean, it's the start of a trend, right? We want something to move. Well, guess what? When it's overbought, something crazy is going on. It might be a trend, and as long as you don't cut it off too soon, like you can make money.
time is tough. I kind of want you to touch on this. Why do you think that works well? Having a stop or exit based on a number of days or hours. What does that make sense? Because you would think is like who cares about the hours in the market?
I know. That's why I felt, and I was pretty reticent to use time exits. Like, come on, this is my money here. This is my life. I'm not going to use a time exit. Um, but what I've found in Forex specifically is that because it's not a long only bias, because it's not an actual commodity like the futures, because it's a relationship of two currencies, two countries, two different politics, I think at some point it just goes the other way. And if you, for example, you can't let winners run in Forex like you can in stocks because it doesn't go one way. You get a huge move, and then guess what? It goes the other way, right? Great Britain doesn't go to the moon, like it's in the relationship of Japan. So something's got to stop it. And I think a time exit allows you, if there is some mania, it's going to go a certain way. But a time exit says, listen, it's gone far enough. Like we've been in the market, 6 trading days. That's enough. It's probably going to, and so many traders talk about getting out, selling on the high, don't sell on the retracement. And I think time exits do exactly that. You get out of the party while the party's good. And I think it works. I didn't think it would work, I'll be honest with you. But I mean, I'm just going by what the math says. But I think that's why, is that it allows you to get off when prices moved in your direction a little bit.
It happened to me a lot in the past. That let's say you get in a trade on a given week, and then it goes really well in your profit. Then on Friday it's like top of your profit, but then the next week it goes back against you for no reason on Monday or whatever. So what you say could make sense there. That could be a good way to do it. So I'm very surprised to hear that.
Again, I'm very surprised. But I honestly, on my lower time frames, I look for the breakout, for example, in my current strategy on a lower time frame chart. But I have a time exit on that too. And the time exit, though, in that case is, I mean, it's really long. Like it's maybe 1,000 bars or 900 bars. It's 15-minute bars, whatever. But it's days and days and days. And in that regard, it's like, listen, if it's not going to work by now, just stop, right? Because eventually, it's the forex market's going to turn on you anyway. So on the daily charts, I found that a short time exit gets you that profit and gets you out while it's getting as good. But if you're going to trade something, for a week or 2 weeks, I like a long stop, time exit stop, because it's like, fine, it's gone sideways for 10 days. That's enough, that sort of thing. So I like it in both regards. Not all of my strategies have a time exit, but I like it.
I'll have to check that. It's a good idea. Now, tell me more about the mindset of trading algos. You mentioned like it's good to trade algos, and there's always the human behavior coming in. Like you fear, oh, I have a couple of losing trades, and because you didn't like take them yourself, then you feel like the algos like trading against you or something, or doing something against you. So how do you work on that mindset of becoming a algo trader?
Etienne, I mean, are you reading my diary? Why are you telling me all these things that I go crazy about? Well, this is funny that you asked. Well, this week, for example, now even though I've done okay this year and done well actually at times. This year has been a ton of reversals, and I know a lot of people have felt it. A lot of people have done poorly, and I'm happy to be in profit or whatever. But especially in the pound yen, it goes crazy one direction and then reverses out, right? So it's like that's been frustrating. And being an algo trader, V reversals are especially frustrating because it's like, ooh, it broke out. I'm in profit. And then you wake up the next morning and it's not. Well, just this week, in the last 6 days, I was looking at the pound yen, right? And I do a lot of analysis. Like I said, it's 100% algo, so I'm studying the rest of the time. And the last two trades, May was kind of so I was kind of mad about May. The last two trades I took, like absolutely, they were long, and I didn't want to be long. I actually, I'm doing a little play-by-play diary. I'm trying to take a small account and make it a really big account. And you're the only one who knows this, so I'm not. I'll publish it maybe in time, but I'm going to track it for however long and then reveal it. So I'm writing in my diary. I wrote down, I don't want this trade. I absolutely don't. It's not going to go long. It's going to be another reversal, and I'm furious, and this stinks, and I hate everything. And it was a huge winner. And so then I got out with a full winner. It reached my full profit target. Hooray. And it's like, it's setting up to go long again. I'm like, listen, it's not going to go long again. And I was watching it. This was earlier today. I was watching it saying, don't go long, don't go long, don't go long. And then I looked at it and like, it's not going to go long. 15 minutes later, I checked back, it went long. And I'm like, oh man, I just had a winner, a full win. I don't want this trade. And I was furious. And now this one I'm almost to my profit target again. So you talk about trading algos, like you have to leave it alone if you're a 100% algo trader that doesn't get involved. And the best advice I can give you is from Moneyball, the movie Moneyball about Billy Beane that came out a few years ago, and that he created this team based on stats and a template, but he never watched the games. Like the general manager would send his team out and say, call me when it's over, because he only wanted to look at the numbers and he couldn't take the emotion. And that movie has stuck with me. It's like, I try as hard as I can just to not look. I try to look once a day, twice a day. I try to stay busy. I think I had 7 vacations in a row where I made profit when I wasn't able to check my trades. Like if you just leave it alone, and it's not that I take robots out, but I've taken 2 out this year, and both of them were bad decisions. And like that almost never happens. But in 6 months, I'm like, I don't want this trade. We're getting close to a weekend, and the Fed is coming out. So you have to just leave it alone. I'm 90% there. But with my strategies, honestly, I should probably just look at them again next year.
This shows how much your opinion as a trader of a trade doesn't matter. Like you could think something, but it could happen the opposite exactly, and that's a big aspect. Now, do you look at your P&L and your account a lot? Is it something you track or not at all? Like you keep it for your monthly review or your yearly review?
I look very close at the end of the month. I peek at it. I have to. I do check it because as algo trader, we have to check the power is on. We got to make sure the lights are on. I if a trade goes rogue, I told a story about a trade last week that went rogue in my favor this time, but it's scary. So I do check it daily, but I don't look. I don't really worry about it. Even checking it monthly is probably too much, but I do a lot of monthly reporting and a lot of tabulating, and I'm interested. So yeah, I look hard at the balance at the end of every month, but I really care at the end of 12 months and beyond.
So we covered a lot here, but one thing you told me before we went live on this interview is the fact that you now do a lot of trading competitions. Tell me about what the motivation is for that and how that's been going on so far for you, these trading competitions or battle.
Yeah, a few years ago, before the pandemic, I got really interested in trading contests because of my tennis background. My whole life was competition for over 2 decades. So I've been in sports my whole life, family full of coaches. So competition is very much a part of my life, and I'm comfortable in that regard. But we're really trading our own money. We're trading for a living. So I never really paid attention. But a few years ago, I started getting really interested in the U.S. investing championships, which is stocks. And then I got involved in the World Cup futures and Forex championships. That's called the World Cup. And it's been around for 30, 40 years or whatever. It's quite famous. And I'm like, well, wait a second, we're slapped upside our head that we're supposed to be happy at 7% a year if we're lucky in index funds. Like the academicians and the retire early people will tell you 7% is all you can hope for and you'll never do better. And so I'm like, oh, well, I'll beat them. I'll get 8. And so you spend your time with this little tiny mindset. And then you look at these competitions and it's like, I got to make 100% this year or I'm going to lose. Right. The 2020 winner of the US investing contest, you know how much he made? 900%. That stock's great. And it was 2020 when we know how that went. But I'm like, usually that's right. Like, you have to think you have to make 100% on your account this year to win a contest. Well, I'm saying, well, wait a second. I've been brainwashed, and we all have been, to say 7% is the only thing we can ever get. And yet here are these people over here, they're going for 100 and with real money. Like, what's wrong here? So I just became fascinated, and it really changed my mindset, and it made me want to go for more. And so I entered it in 2020 and did well, finished second, and I'm entered again this year. And I was in the top 5 a month ago before May hit. But I'm still right outside the top 5. But it forces you to think, and it forces you to have a mindset of more. And yes, it probably makes us use more risk, but not irresponsible risk, but definitely more risk. It's not for maybe, your retirement if you're going to rely on it. But the mindset change for me has just been phenomenal. I just love it. And I love thinking about it, and I love planning for it and trying to win. So it's just been a real help to my trading.
Yeah, one could say that you're risking way too much for getting at 900% a year. Do you feel like that's the case? Do you feel like it's something realistic to aim for, or do you feel like that's like kind of a stretch and that you should just, if you want to not lose your money, that you should like maybe scale it down a little bit, have something more reasonable in that case?
I have, and probably I'm stupid, but I have zero fear of losing my whole account. Like like this isn't like, well, I have several grand to lose and I don't care. Like I'm gonna go for it. Like not at all. Like these are in the contest accounts. I'm planning on having these accounts for the rest of my life. So if you look at it, and way everyone is told, risk 1%, risk 0.5% on every trade, play the long game. Well, this is not that. You're not risking 1% to win a trading contest. But I don't feel out of control. I have numbers. If things did get bad, you could just drop the trade size. So no, I don't think it's irresponsible. But other people might disagree, and that's fine. They're probably right.
Yeah, so it depends on your goal, right? So it's your goal to preserve your capital to win a contest. I think that's a valid point. And the fact that you can always like you probably have done your number, your data, you know how much you would get if you risk X% per trade. You know like what the drawdown would be in that case, and that makes it a lot more comfortable for sure. But most traders don't have any stats on their trading, so that's the issue there.
Well, that would make it tough. Yeah, if you don't know, if you're just saying, I'm going to trade 2 lots and you have no idea why, I do know exactly what my trade size can do historically. So yes, I do know the worst case scenario, and I'm very clear about that. So yeah, that you do know the stats for sure.
That's awesome. So we've covered a lot here. I think we went through a lot of different topics, and that's good for people to who are listening to this. Of course, they'll get a lot of value out of it. What can they find you and connect with you or reach out after the interview is published?
Yeah, scottwelshstrategies.com. That's my website. That performance page I mentioned where I track all of the algos or several algos. You can email me there in the contact page. Yeah, scottwelshstrategies.com. I also have a YouTube channel. You can Scott Welsh Strategies that too. So either way. Or watch me on Etienne Desire to Trade.
Awesome. It would be great to have you back. Of course, it's a topic that we can discuss for hours and hours because algos are a big part of my trading now. Like we discussed this before we went live, it's the fact that watching chart isn't the productive use of your time most of the time. Like you could take a few trades, but then if the algo can do that itself, then there's no need for you to be there and take trades. In my opinion, of course, you could like it, you could do it, but it's just a different game.
I'm 100%. To not have to look at charts is the best thing. Yeah, I love trading. I don't love looking at charts.
Awesome. Well, thank you, Scott. I appreciate your time. I appreciate your advice you gave here for my listeners. And you guys let me know in the comment section what you like, what your favorite advice was from this interview. And we'll catch you back here for the next video.